Well, CBA, like the rest of the Big Four, was pretty quick off the mark to pass that full 25 basis point hike onto home borrowers. Why wasn't it passed on in full to all savings products?
Well, I think in terms of the timing, it tends to be around the same sort of time. We've been careful to match the announcements and the implementation dates, whether the rates are going up or down.
Matt Comyn, CBA data shows 87% of home loan customers are ahead on their mortgage repayments, but what about the other 13%? How worried about that cohort are you after the latest rate rise?
Well, look, this is where I think I'd say there seems to, of course, be a disconnect in terms of the broader sentiment, certainly as rates were increasing. Of course, that weighs on all homeowners and anyone with a mortgage or a broader loan facility. I think the facts really clearly show that a very, very small proportion of customers are not making their repayments. That number you've referenced in terms of 87% ahead on their repayments, that's about as high as it's ever been. It's up quite significantly in recent times. And so there's been one rate hike, as of course we all know. We're forecasting one more in May. We're hopeful that that is the end of the rate hiking cycle. And so, I mean, clearly that will cause some anxiety and weigh on some of our customers. We don't really see that turning into, broader financial distress or stress amongst many of our customers. But of course, we're here to provide assistance and support for anyone who needs it.
Are you seeing a proportion of customers choose to refinance in the face of this higher interest rate environment?
Look, I think we've seen over, particularly, of course, our result today was to 31 December 2025. We did see a pickup in credit growth over the course of that year. Now, of course, that's before the latest inflation reading and the latest interest rate hike. So, we saw a stronger credit growth last year in home loans, sort of 7%. More than 10% in business lending, and of course house prices were up again last year. We do think there'll be a slight moderation in terms of housing credit growth. More broadly though, the labour market is still very strong, so unemployment is at very low levels. It is important, of course, that inflation is reduced. I think inflation hurts everyone, particularly lower income Australians, and so unfortunately, it does look like there'll probably be one more rate hike, but as I said, we're hoping that will be the last of it.
Well, CBA, like the rest of the Big Four, was pretty quick off the mark to pass that full 25 basis point hike onto home borrowers. Why wasn't it passed on in full to all savings products?
Well, I think in terms of the timing, it tends to be around the same sort of time. We've been careful to match the announcements and the implementation dates, whether the rates are going up or down. Of course, on the back of the RBA decision, it's bad news for borrowers, for depositors, of course, on the other side of that equation, less so. Look, we certainly passed on the full rate increase on many of our savings products. In one particular instance I can think of, we passed on 15 basis points instead of the full 25, but we're also running some very attractive special rates for customers across the board. And so I think we're certainly very confident that we're competitive in market and we're supporting our customers, and that's actually evidenced in the last 6 months is our ability to grow above the rate of the market across all of our customer segments.
Well, net interest margins have been hurt by home loan competition. Is that why savers aren't going to get back any further margin? You don't want to crimp it further?
I think any company needs to balance a whole range of different decisions. I mean, margin or net interest margin, there's a number of different factors that go into that. Yes, there's increased competition, but I think it's from our perspective, we try to make decisions that we think are most appropriate across the full portfolio of customers and products that we're fortunate enough to serve. We make regular changes to our pricing decisions, obviously in light of changes in the cash rate, but in other instances where we're not dependent on the cash rate, things like our term deposit rates tend to move more with the expectation of where interest rates may go. Similarly, that tends to be more how fixed rate home loans are priced. And so, look, I certainly think we're seeing and delivering very good value for savers, and of course remaining competitive right across the board.
When it comes to competition in the home loan sector, how selective can you afford to be when it comes to the types of loans you offer in terms of quality if you want to maintain your dominant position, given the competition being brought by players like Macquarie?
It's more about we offer a breadth of service and a customer proposition that's unmatched insofar as we serve all parts of the community, all parts of Australia. Some of our competitors are very focused only on affluent customers living in metropolitan or major cities. And so we, of course, think about customers from first home buyers right the way through to sophisticated investors. And it's one of, I think, our strengths is we're able to provide that diverse customer base across Australia, a full and a comprehensive banking system. Some of the competitors that we have really only have quite a narrow offering. Of course, we have to be mindful about the risks, but what we've seen over a long period of time in housing is it's a very high performing asset or loan facility from our perspective. That's heavily dependent, obviously, on the underlying economic performance of Australia, and we have a strong labour market, as I said earlier, and certainly our expectations is that Australia can continue to perform well economically, and if that happens, then the Commonwealth Bank will do well alongside that.
Your profit grew in the last 6 months of calendar 2025, first half of 2026. The economy is predicted to soften as we head into 2026 and throughout. Does that mean your profit will also soften?
There's a lot of different factors that will contribute to that. Of course, volumes in terms of deposits, and then of course of loans. Typically, if the economy is not growing as quickly, we won't be lending as much. We're actually expecting that business lending will continue to remain high. I do think boosting levels of investment across businesses and adopting new technologies is important. There's, rightfully a big focus on how do we boost productivity so Australia could grow at a faster growth rate without contributing to inflation. Of course, what we refer to as credit costs, or what's the performance of all of our large loan books. We've got a $650 billion home loan book as an example. All of those things weigh into the profit performance. But to my earlier comment, when Australia's economy is performing well and growing robustly, well, then the Commonwealth Bank will grow with it. That's a big part of our job, is providing both financial stability and also facilitating economic growth.
Well, you mentioned productivity, and that, of course, is a big discussion point at the moment. What one thing do you think Australia could do to help achieve some productivity gains that are clearly lacking?
Yeah, one of the issues is I don't think it should be one thing. I think, productivity can seem like an opaque concept, but when you see the inflationary pressures in the economy, because effectively there's not enough supply side to be able to incorporate the increase in aggregate demand, we need to do a few things. And I think we think about it economically in the context of getting inflation down. That is extremely important. How to boost productivity comes in a variety of different ways. I think we've got to be tackling things like intergenerational equity. We've got to be looking at the tax system. We've got to make it easier for businesses large and small to employ the right levels of skilled labour. We have to be able to get things planned, approved, built more cheaply and effectively. We need to be adopting technology across the economy as it either gets developed here or is made available internationally. There's a number of these elements which are really important, and quite simply, if productivity was 1% higher, then over the next 20 years for a household that was earning $80,000, they'd be $200,000 better off in real terms at the end of those 20 years. So, it's real dollars. There's a lot of things that contribute to it. It's not an easy problem or concept sometimes to understand, let alone solve, but it's a really important aspect of where I think a lot of the focus, and certainly whatever we can do to support some of those policies, we're very willing to do so.
Well, CBA is investing in AI across the organisation. How do you see AI changing your organisation and the sector as a whole?
Well, I think we've been using AI, certainly not generative AI, for more than a decade. Generative AI, obviously, more recently. We use it today in a whole range of different ways to help better serve our customers in some of our digital experiences, to help detect fraud and scams and cyber, to help us to develop software, to help us do many things more efficiently. I think some of the risks to employment or the labour force, at least in the near term, are overstated. I do think continuing to invest and adopt the technology both inside the company and also in the way we serve customers will strengthen the customer experience, make it a much sort of more dynamic and also an experience that helps both make our customers' experience more convenient, but also keep their money safe.
A big question, if you don't mind, how do you see AI playing out more broadly in the economy? Is it going to be a great equaliser, delivering productivity, or could it be quite polarising? Do you have a view?
Well, I think the potential is there for it to provide both improvements to productivity, improving across a range of different industries, the service experience. I think it will create new jobs. I think at times it will cause concern in different parts of the community. We think it's really important to be engaging and talking about how AI is used. We released our first sort of AI transparency report publicly last week. We put a lot of effort into explainability and transparency and reporting so that customers know when we're using it and we can point to the benefits. I think it's like anything that's new and uncertain. It's important to help educate and be able to demonstrate where the benefits are. There are, of course, risks associated with it as well, and so those risks need to be managed. But I mean, I think it's a technology that inevitably is going to have a pretty significant impact, certainly over the long term on a global basis, and it would be remiss of Australia not to be thinking very carefully about how to best adopt it so that the value of technologies like this are distributed within Australia to Australians.
The Financial Sector Union has put out a survey of your workers today to coincide with your results, saying 72% fear for their job security, predominantly because of AI. What assurances can you offer your workers that their jobs are secure in the face of this change?
Yeah, well, one of the things that we've been very open about is talking to all of our people about how we're using AI. We've rolled out tools to all of our people. We're encouraging them to, leverage and use the technology to develop and improve a whole range of our customers' experiences. And without getting into the individual survey, I do think both talking directly to our employees and with the union is important. As I said, I think we should be able to adopt these technologies. This is going to be a really important sort of strategic priority, not just for the Commonwealth Bank, but more broadly. But I also think the other side of that is, as an employer, need to be very open and engaging with our people, talking about how they can build new skills and capabilities, how they can not just be resilient from a career perspective in the near term, but also in the long term. And I think undoubtedly that's going to require greater skilling, new skills being taught and learnt by our employees, and that's something that we want to do. We see this as a partnership with our employees and to embark on that journey, and we're already talking to the union. We'll continue to do so.
Matt Comyn, thank you so much for your time.
Thanks very much.